All right, listen up, because some of you need this reality check more than you need your morning coffee. You keep telling yourself, HBAR is safe, it's enterprise ready, big banks and Fortune 500 companies love it, nothing can go wrong. Really? You honestly believe that? It's like saying, I'm fine eating pizza every night because it's got tomato sauce, and tomatoes are technically vegetables. HBAR is powerful. Don't get me wrong, it's fast, energy efficient, and already shaking hands with names so big they make Ethereum look like your neighbor's garage project. But, and this is the but nobody wants to talk about, enterprise adoption doesn't mean price protection. Here's the brutal truth. While Hedera is over here winning partnerships, most investors are still sitting in the corner like, why is the chart flatter than my ex's sense of humor? But wait, it gets worse. You're addicted to the fantasy that adoption equals instant moonshots. Then reality walks in, slaps you in the face and says, no, dummy, adoption equals utility, not necessarily price pump. Let me explain. Enterprises don't care about your little bag of tokens. They're not holding HBAR hoping to cash out at $10.00. They're using it as rails, as infrastructure, as a tool. That's like confusing the fact that people are using electricity every day with the assumption that you'll get rich buying shares of your local power company. Spoiler, you won't. And here's where I get really mad. You've been hypnotized by influencers with thumbnails that scream, HBAR $100 0 cents soon? Bro, HBAR isn't a lotto ticket, it's infrastructure. You don't buy asphalt expecting the price of asphalt to 100x. You buy asphalt because you need to pave roads. That's what HBAR is, the highway of digital assets. Useful? Absolutely. Moonbound overnight? Stop lying to yourself. But here's the big risk, the one thing everyone ignores, token supply mechanics. Hedera still controls huge amounts of tokens. They're unlocking, distributing, incentivizing. Translation, they're selling. And when big players sell, it doesn't matter how many good news headlines you share on Reddit, the price will sag like a cheap lawn chair. Then, the second you forget about that, boom, another unlock, another dip, another round of HBAR is dead posts. And you sit there acting surprised. Really? That's like going on a roller coaster and being shocked every time it goes down. That's literally the point. But let me flip it. Does that mean HBAR is doomed? No. This is where the joke's on the doubters. Because while you're crying over price dips, institutions are happily building on Hedera. Why? Because they don't care about your short-term chart. They care about long-term efficiency, cost savings, and trust. And then here's the real punchline. The people who actually win with HBAR aren't the dreamers waiting for $100 0 cents. It's the grinders who understand what's really happening behind the scenes. They're not staring at the chart every 12 minutes. They're watching adoption, partnerships, regulations, and tokenomics. They know dips are part of the ride. And speaking of rides, smash that like button before I lose my mind. No, seriously, hit it, because if I've already pissed you off in the first few minutes, you might as well reward me for saying the things you've been too scared to admit out loud. Now let me drop this on you. The number one risk of HBAR isn't failure, it's investor blindness. You're so in love with the tech that you refuse to see the business. You think just because it's better than Ethereum, the market will suddenly reward it. Guess what? VHS was worse than Betamax, yet VHS won. Don't assume better means winner. Then here's the twist. HBAR still has one massive ace up its sleeve that most of you haven't even thought about. But before I tell you what that is, I want you to do something. Drop the word awake in the comments if you're tired of being spoon-fed hopium and ready for real talk. I'll know who's actually listening. Because here's the deal. If you can't handle the truth about Hedera's risks, you shouldn't even be in crypto. But if you can, then you're about to see why the risk is actually the opportunity in disguise. So don't move, because in the next segment, I'm about to tell you how the very thing that scares investors to death might be the exact reason Hedera ends up dominating the global financial system. And if that doesn't make you smash subscribe, I don't know what will. Unless you like losing money. Do you like losing money? No? Then subscribe. You ever hear the phrase, don't look behind the curtain? Yeah, that's exactly what 90% of HBAR investors are doing right now. You're too busy sharing bullish tweets and pretty infographics while ignoring the giant elephant in the room, token supply. Let me break it down. Hedera didn't drop out of the sky like Bitcoin with a fixed cap and no central control. Oh no, HBAR came with a giant treasure chest of tokens, and the Hedera Foundation and Council get to decide when and how to release them. But wait, you say, that's for ecosystem growth. Sure, and technically so is pizza for breakfast. It's still calories, right? Doesn't mean it's good for you. Here's the harsh reality. Every time Hedera unlocks and distributes more tokens, that's selling pressure on the market. It doesn't matter if they call it ecosystem funding, developer incentives, or partnership alignment. The chart doesn't care. The price dips every single time. And the wild part, most of you act shocked when it happens. You run to Reddit crying, why is HBAR dropping when adoption is up? Because, genius, supply and demand still exist. You can have all the adoption in the world, but if tokens are flooding the market faster than buyers can scoop them up, the price is gonna sag harder than your grandma's curtains. But here's where it gets hilarious. Some investors think, that's okay, the council knows best. Bro, stop. The council isn't your babysitter. They're not losing sleep over your $500 0 cents HBAR bag. They're managing billion-dollar enterprise partnerships, and if selling tokens keeps the lights on, they'll do it. You're just along for the ride. Then, here's the kicker. This supply risk isn't actually the end of the world. It's the very thing keeping Hedera alive and expanding. You want developers building apps? They need tokens. You want enterprise adoption? Companies need incentives. You want liquidity in DeFi? Liquidity pools need fuel. Guess what fuels all that? Token unlocks. So yeah, it hurts in the short term, but long term, it's part of the playbook. The problem is most retail investors don't have the patience. You want HBAR to moon in 6 months while Hedera is playing a 10-year game. That's like planting a tree today and yelling at it tomorrow for not giving you apples. Relax. Let's lighten it up for a second. Imagine you're at a buffet. Every time you grab food, the staff brings out more trays. You're stuffed, but they keep piling it on. That's Hedera's token supply. You think you're getting to the end, but nope, here comes another round. And unless more hungry people walk in, the food starts to look less appealing. But then here's the opportunity. Once adoption scales, once enterprise demand matches token unlocks, this whole supply risk flips. Suddenly, what looked like dilution becomes acceleration. Tokens aren't just dumped. They're used, staked, burned, and circulated in real ecosystems. And if you think I'm exaggerating, look at history. Ethereum had massive early supply distributions, and people screamed scam for years. Now, ETH is practically the digital oil of Web3. Supply didn't kill it, demand saved it. But here's where I want you to think bigger. Stop staring at the next token unlock date like it's the apocalypse. Start asking yourself, where are these tokens going? What's being built? Who's using them? If the answer is nobody, then yeah, you're screwed. But if the answer is banks, enterprises, DeFi platforms, then congratulations, you're just witnessing the painful middle chapter of a much bigger book. And let me say this directly, if you can't handle volatility, if you cry every time HBAR drops 10%, maybe crypto isn't for you. This is the jungle. It's survival of the smartest, not survival of the most optimistic. Oh, and by the way, if you're still watching and nodding your head thinking, damn, he's right, then prove it. Smash that like button right now, because I promise you, I'm the only one on YouTube willing to say this stuff without sugarcoating it. Everyone else is too busy whispering sweet nothings into your ear like your toxic ex. Now let's get real, because this is where the story twists. The one risk everyone's ignoring isn't just supply, it's the psychology of investors. The way you think about HBAR could be the reason you either retire early or lose your shirt. And in the next segment, I'm going to tear into the delusion problem, the mindset that's destroying HBAR investors from the inside out. You don't want to miss this because I guarantee it's going to sting. Oh, and one more thing, drop the word elephant in the comments if you actually admit supply is the problem nobody wants to face. Let's see who's awake and who's still living in denial. Let's be brutally honest here. Most HBAR investors aren't losing because of tokenomics or supply unlocks or even the market. Nope, they're losing because they're delusional. Yeah, I said it. You're sabotaging yourself. You sit there refreshing charts every 10 minutes, convincing yourself that one green candle is the start of the run. Then when it dips again, you scream manipulation. Bro, it's not manipulation, it's math, it's markets, and most importantly, it's your own damn expectations punching you in the face. But here's the comedy in all this. HBAR investors act like they're the chosen ones. You believe because Hedera has Google, IBM, Boeing, and a laundry list of council members, you're automatically guaranteed riches. That's not investing, that's a lottery ticket mentality wrapped in a suit and tie. Then you double down on hopium. You ignore every red flag because it feels better to repeat bullish mantras. You're basically a toddler with their fingers in their ears yelling, LL, LL, I can't hear you. Meanwhile, the grown-ups, institutions are building, experimenting, and positioning themselves while you're stuck on Twitter arguing about price targets. Here's where the delusion gets dangerous. You confuse enterprise adoption with retail payoff. Just because banks use Hedera doesn't mean they want you to get rich. They don't care about your bags. They care about cutting costs, increasing efficiency, and slashing transaction times. If they can do all that without pumping your portfolio, guess what? They will. But wait, then comes the second delusion. Price doesn't matter because adoption will save us. Excuse me? Try telling your landlord, hey, rent's late, but don't worry, adoption's up. He's gonna laugh in your face. Price does matter because without retail interest, without demand, adoption stories alone won't support long-term valuation. Let me paint it for you. Imagine you buy a gym membership. The gym gets new equipment, better lighting, and more staff. Amazing, but you never actually work out. What happens? You don't get stronger, you just keep paying. That's HBAR investors right now bragging about how good the gym looks while ignoring the fact that they haven't lifted a single weight. And don't get me wrong, I'm not saying Hedera isn't legit. I'm saying your delusional expectations are the real enemy. You want a straight line up. You want instant wealth. You want to skip the boring middle part where networks mature, regulations settle, and adoption slowly builds, but life doesn't work like that. Then you rage quit at the first dip, only to FOMO back in higher. Rinse and repeat. You're your own worst enemy. And let me crack a joke here. You know what HBAR investing feels like? It's like dating someone out of your league. You show up on the first date, already picturing the wedding. Meanwhile, they're just trying to finish their meal. Slow down, Romeo, you're scaring them. Now let me challenge you. Instead of staring at the chart, start looking at the moves. Look at the $5,400 billion, 0 cents FX trades in the UK. Look at the Australian digital dollar live on Hedera. Look at the real world use cases stacking up. If you can't see that, if you only care about price today, you're missing the forest for the trees. But then here's the punchline. Your delusion could actually save you. Because if you're so blinded by hopium that you never sell, you might accidentally become a long-term holder. And guess what? Long-term holders are the only ones who make it. The problem is most of you panic sell halfway through and lock in your losses. So let me be your inner voice right now. Stop being a clown. Either commit to the long-term game or step aside. Half measures will destroy you. And since I know half of you are secretly agreeing with me but too stubborn to admit it, do me a favor, drop the word clown in the comments if you've ever sold low, bought high, and then blamed the market. I'll wait. Oh, and while you're at it, smash that like button before your next delusional hopium binge, because you know deep down, this is the channel that's saying what you're thinking but too scared to say out loud. If you thought delusion was the biggest risk, you're wrong. There's still one monster hiding under the bed. The risk that HBAR could succeed so well, it outgrows retail investors entirely. And when that happens, you'll either be on the train or left standing at the station with your empty bags. Stick around. Here's the nightmare scenario nobody wants to admit. Hedera doesn't need you. Yeah, I said it. If tomorrow every retail investor dumped their bags, Hedera would still thrive. Why? Because enterprises, banks, and governments aren't building for your moonshot dreams. They're building for efficiency, compliance, and scale. But here's the twist. Then what happens when Hedera succeeds so hard, it becomes invisible to you? When your credit card settlement, your paycheck, your mortgage all run on Hedera, but you don't even know it. You'll still be complaining about the price not moving while the infrastructure of global finance quietly runs on the tech you ignored. That's the risk. Not that Hedera fails, but that it succeeds without you. You'll be left holding empty bags because you didn't understand the game. You wanted fast profits, while the real players wanted long-term dominance. And let me roast you one last time. If you can't stomach that truth, maybe crypto isn't for you. Because this market doesn't care about your feelings, it cares about power. And Hedera is playing chess while most of you are still trying to win at tic-tac-toe. So here's my challenge. Comment the word awake if you're done living in denial and ready to actually think like an investor, not a gambler. Smash subscribe if you want someone to keep yelling the truth at you when everyone else is feeding you candy-coated lies. Discover, because Hedera isn't waiting for you. The question is, will you wake up before it's too late?